FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange, under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It is 4/17/19. I hope you had a chance to tune into our Blue Sky Uranium webinar last night. If you didn't, just send me an email. I'll send you a link, and you can find all about Blue Sky, its prospects in the uranium business. It's a low-cost, easily obtainable uranium deposit in Argentina, a great potential junior miner for a sector where there really aren't a lot of choices. Uranium, you don't have a lot of companies left. Most have either been acquired or are 6 feet under. Anyway, kl@kerrylutz.com is the email address. I'll send you out the link right away. So, question is, what's going on with the U.S. economy? And as a corollary to that, what is going on with the stock market? And what can we expect? Well, the economy did not shut down, contrary to popular and partisan belief, in the first quarter just because there was a government shutdown. Well, guess what? The economy did not shut down with it. And what does that tell you about our reliance upon the government, our belief in its abilities, in the job that it does? Well, it was only a partial shutdown affecting approximately 25% of the government workers and contractors involved. Well, Chris Vecchio is with us now. And Chris, it's the first time you've been on the show, I believe. And I guess we find you over at dailyfx.com. Welcome. And so I guess reports of the stock market's demise were greatly exaggerated, weren't they?
As is often the case, at least for the past 10 years, those concerns about the government shutdown did filter through into the real economy, on net about $3 billion in lost wages. But this is a strong economy right now. According to growth forecasts put forth by the Atlanta Fed, we're looking at about a 2.4% annualized growth rate in the first quarter. When we're looking at the New York Fed nowcast, that's showing about 1.4% annualized growth rate. So everyone calling for the U.S. economy to slip into immediate recession, they appear to be wrong.
Hey, and just a couple of points here. A $3 billion loss in wages. Well, you could go to this place called Lost Wages, and they pick that up in a couple of weeks. So that's not really that significant. Yes, if you were unemployed and not getting a paycheck and didn't get made up for it, yes, you lost out, no question. But the actual impact upon the economy, more the uncertainty than anything else. And the other thing we need to point out, and I think you'll back me up on, Chris, is first quarter is generally about the weakest quarter of the year because you've got post-Christmas, post-holiday, postpartum blues, I guess, that set in. After that, you just don't have a lot of consumer activity, from everything from Christmas stockings to Chevy Tahoes. Really, it just slows down in January, and then February's short month. And then you've got all your weather ills, which really do hit hardest the first quarter of the year. So really, when you take all that into consideration, economy not doing so bad.
I would take it a step further. I think the economy is doing well by all those accounts. You're absolutely right. Since the financial crisis, the Great Recession in 2008, there has been this residual seasonality of sorts, as some may call it, where the first quarter has produced consistently lower growth readings than any other quarter throughout the year. And for the very issues that you just mentioned, there is a big slowdown in consumption habits after the Christmas holiday period. We do have that weather issue that affects the northern part of the country, but particularly the Northeast, where there's a large population block, and that impacts housing formation. You can't really build when you're dealing with snow and rain and sleet. So the fact that we have seen the economy weather the storm, so to speak, and come out with a 1.5 to 2.5% growth rate here isn't something that people should be disappointed in, all things considered.
Yeah, really not. And it's just the way that the economy works. First quarter is always the weakest, and now it had a little bit more impetus to be weak. We got these Midwestern floods. No doubt they're going to have some kind of effect on the economy coming for the second quarter, but probably not as much as might be otherwise anticipated. So question is, though, Chris, look, 10 years the bull market's been going on, longest in history. And granted, the real economy hasn't expanded anywhere near the rate that the paper economy has. And the other thing is that, look, new claims for unemployment or jobless benefits, which seems to be it shouldn't exist, but in any event, whatever the reason, we have unemployment insurance at generational lows, actually near half-century lows, 50 years. New claims have not been this low, and we're not even talking on a per capita basis, Chris. We're just talking absolute numbers. There are somewhere a couple 100,000 a week, and the population has doubled since 1969. Really, we should be looking at, if it's per capita, should be about 400,000 claims for unemployment. So that means that really, and I haven't seen this written anywhere, that the people who are leaving their jobs for whatever reason is really down at unbelievable lows. Because the other thing that happened since 1969 was, besides the population expanding, the workforce expanded dramatically with females seeking careers and leaving the home. So when you take all that into account, this is a major number.
I agree with you completely. I think that's something structurally that a lot of people don't talk about enough when we talk about the labor market and the economy in the 1960s, 1970s. You have two major structural reforms that happen in tandem: civil rights movement and women entering the workforce. And as a result, you see a significant part of the population that now has spending power, that has disposable income. Today, that's not really the whole case. We don't have another segment of the population that has been deprived of work that's about to come in play. And so to your point, the jobless claims being so low does speak to the underlying health of those that are active in the economy. Right now, if you take a look at unemployment rates for people with bachelor's degree, it's around 2%. People with a high school diploma, it's around 6%. And so those historically are exceptionally low, all-time low figures there. One thing that I do want to point out, however, that may be a cause of concern, something that I know isn't necessarily felt in the major urban centers around the country, but you go out to rural areas, and certainly this is more apparent, but the labor force participation rate remains low. It's come down the last few months. It's only at 63% of able-bodied adults who are eligible to work. And moreover, we've seen that able-bodied males, 18 to 34, those participation rates remain low. And that's a structural issue that's been going on, not just since the 2016 election, but this has been going on for decades, really, particularly since NAFTA was signed in the law back in the mid-90s. And I think that this is an issue that we will have to deal with moving forward. The fact that we're this deep into the bull market, it's been 10 years since the recovery. As you point out, yes, the stock market's done well, but the real economy has lagged behind. This could be a potential issue that when the next recession hits, and inevitably it will hit. We like to think that economics is like physics and that we've moved out the business cycles, but there's an ebb and flow to everything in life. And so when the next recession hits, we should be concerned about some of these other trends.
Yeah, well, there is a little bit more to workforce participation rates. I know they're important. So during the Great Recession, it really took a hit. I think it was at 67%, and then it went below 63. I think it was down to 62. And since Trump entered office, it's gone up to about 63, 62.8, I think was the last number I saw. And the thing is this. So the Great Recession caused a lot of baby boomers to take early retirement, and also a lot of people with questionable claims to go on disability, Social Security disability, which is kind of another form of welfare, if you will, even though you theoretically have paid for disability through your contributions to the Social Security system. My point is that really these people retired effectively, all right? They're getting paid, whatever. And the other thing is that the baby boomers, their pace of retirement has picked up. So their pace of retirement's increased. The rate of millennials being employed has gone up too, but not enough to make up the difference and up the participation rate. So I think there's some mega trends. I think there's some demographic trends at play here that don't really get enough attention. It's not just enough to say workforce participation rate is down, economy not doing well. There's other forces at work here.
I'm with you 100%. And one thing that I can speak about my generation in particular, when I think about the housing market, for example, student debt's a real problem. Everyone doesn't have an endless pocketbook. So if I have a set income per month because I'm working a salary job and I have to pay $200 a month, $300 a month, $500 a month to a student loan, that's money that I can't pay for a mortgage. That means that my ability to go out there and buy my first starter home is going to be significantly impaired. That
Absolutely.
means that me forcing to rent a property for longer or live with mom and dad for longer will be impaired. And you know what? For the longest time, part of the American dream was that if you worked hard, you're able to get your first home, you move in there with your family. That was part of the cornerstone building your life. And it's become that much more difficult now. So I do think there are these structural issues in play. So many that we could go on and have this conversation for hours, quite frankly.
Sure.
That don't get enough attention and that we do need to be aware of. But that's not to say that the economy on whole hasn't been doing well and hasn't been performing above expectations, better than what you'll hear about the pundits saying, certainly on TV, because fear and uncertainty sells eyeballs, right? And that's what they want. They want people paying attention.
You got it.
And so that's what we hear about.
That's for sure. Hey, well, are there any other trends that you're following here? I mean, we'd be remiss if we didn't talk about Brexit, but as far as the U.S. domestic scene, any trends you're seeing here that really are ignored or kind of underappreciated by the analyst as a whole and the public at large?
I think right now we should be concerned about what's happening with the housing market, particularly in some of these urban areas when we've seen these mid-market type cities face housing difficulties. That usually is a warning sign that maybe some other issues are popping up in the economy. Right now, I know that we've gone through a wave of higher than expected wage growth. We've peaked out around 3.4%, which was a 10-year high.
Mm-hmm.
But the cost of living has gone up as well. So in terms of real income remains exceptionally low for Americans right now. We're in an economy where interest rates, relatively speaking, compared to the last few years, are up. And at this point in time, even though the Federal Reserve has said that they will not be raising rates again in the near future, the fact is with the unemployment rate so low and the state of the economy where it is, we can't dismiss the fact that credit conditions could remain tight for a little while longer. And so, again, 10 years into an economy's bull run, into an expansion, is a long time. One thing that I said before the 2016 election was, regardless of who wins, Trump or Clinton, it's very likely that they will have to deal with a recession by the end of their first term. Mm-hmm. And I think that still holds here, just by the law of averages. On average, the expansions in the post-World War II era have lasted around 7 to 8 years. So this is long in the tooth historically. And right now, I think that people may be starting to look for signs where that could become a self-fulfilling prophecy. Because it's become so long in the tooth, any piece of negative information serves to reinforce their bias and in turn provokes them into taking more defensive position. At the present time, I think macro tailwinds are pretty strong. Brexit's off the table. U.S.-China trade war deal looks like it could be coming together. The U.S. economy is doing better than expected. It's understandable why stocks have gone up in the near term. And so I won't dismiss that there's good reason to be optimistic right now as we emerge from this terrible winter, particularly in the Midwest. Mm-hmm. The second half of this year, I would start to be raising my eyebrows and be getting a little bit more defensive, if it were.
For sure. I agree with you there. Those trends definitely are in place. And, it only goes so long before it runs out of gas. It's just the cyclical nature of things. But we're very close to 2020, the next election. I just can't see it coming before the election. I mean, anything could happen. Look, these numbers, something could go wrong. But if a China deal comes through and a few other things fall into place, effectively, Trump will have pulled another rabbit out of the hat, and the economy will be off the table for the 2020 election for sure, at least as far as attacking his handling of it. Hey, let's move on to Brexit here, because you've got some insights into that I'd like you to share with the FSN community out there. What do you see happening with Brexit? Because right now it's chaos. They don't know what they're doing, but they know they have till, I think it's October 31st to get it done. That's about the only thing they've managed to accomplish.
Right. So Brexit right now is kind of taking a two-tiered approach moving forward. There has been an agreement to push back the deadline until October 31st. But at the end of June, there will be a check-in, so to speak, with the EU. What happens next is going to largely depend upon how the cross-party talks between Jeremy Corbyn, the Labour Party leader, and Theresa May, the Tory party leader and current UK Prime Minister, how those eventually wind up. Now, I would say that given the state of negotiations, signs are pointing to no agreement in those cross-party talks by the end of April. This week is a slow news week. UK Parliament's out of session until April 23rd due to Easter, and as such, we haven't heard much news. But over the next week or so, once we get back into session, I do expect that we're going to get some news on this front fairly quickly. And if we don't get that cross-party talks successful, then there's only a few options really moving forward. Will we see Theresa May resign? Could we see the Labour Party bring forward a motion of no confidence in the government? I think that's very likely, in fact. If that happens, does that mean we go towards a general election? I would say from here, right now, the most likely outcome, given all of the failed votes that we've seen in the UK Parliament, is for a general election. The current composition of members of Parliament, if it's on the Tory side or the Labour side, they just can't seem to find the votes for any semblance of any deal, right? They want a Brexit, but they don't even know how to define what Brexit means. And that's an issue here. So going back to a general election where perhaps they can get the lawmakers in place who will respect the will of the people is the best bet moving forward. Otherwise, we kind of enter this no man's land where could we see us hurtle towards October 31st where no deal comes together, and ultimately does that mean that we see no Brexit at all? Or do we go towards another referendum altogether? Mm-hmm. The options really open up if things don't come together over the next few weeks. I think this is a situation where we may hear about this for a long time to come, unfortunately.
Yeah, there's no indication that progress is going to be made. Do you think a hard Brexit is in the offing?
I think the odds of a hard Brexit are limited, right? No one really wants to be the person carrying that responsibility. And when I mean responsibility insofar as there would be an immediate stop in trade between the UK and the EU, and really the UK and the rest of the world here, as kind of an example of the EU's negotiating power here. We heard a lot of talk by President Trump on the campaign trail about how he would work with the UK to give them a good deal if they were to Brexit and if he were to become president. But since then, since he's got into office, his tone has changed. He's actually said, the administration has said that if the UK is to get a deal with the United States, it would have to be under an umbrella agreement that exists elsewhere, like the TPP, or being part of the EU. And so the UK is really looking at a situation where, yes, it may be the world's fifth largest economy, but it's not bigger than the EU. It's not larger than the US. And the EU, as the world's single largest economic bloc, it can throw its weight around, for better or for worse. I may not agree with everything that it's doing, but that's the power that it retains. That's kind of the issue that the United States is having with China now, because US politicians pushed off this moment of reckoning for so long. China has gotten so economically strong that it can kind of dictate the terms of its own engagement now. Whereas if this was a conversation that was had in 2001, when China joined the WTO, we would have had a lot more leverage to negotiate the terms of engagement. And their ability to join this global trade order. Now, not so much. We have to respect their wishes a lot more equally.
Yeah.
So I think that's the place where the UK finds itself in right now, where it doesn't have much leverage. It's turning to its allies as allies are saying, we're looking out for our own self-interest as well here. The United States doesn't want to bother the EU because we rely on the EU for a lot of things, defense sharing agreements, military connection, economics, culture.
Mm-hmm. Yep. Agreed there. I totally get your point and can see that really options are limited, but even the people that voted for Brexit are having second thoughts about it. Unfortunately, this is really the EU's last chance at reform till eventually it's going to blow apart because there's so many ridiculous and inequitable aspects of the EU and their attitude towards basically unfettered immigration from any place in the world. And this is what's disenfranchising the French. The Yellow Vest rebellion has been on now for 20 some odd weeks, and it shows no indication of ending anytime soon. And I think that it's a situation where it's just become untenable for so many countries to comply with EU's dictates and diktats. That
I'm with you there so much.
Yeah, I mean,
when you look at France, the whole situation with Emmanuel Macron is incredibly unpopular right now. I think 22% approval rating among the French.
Mm-hmm.
Everyone said that him beating Marine Le Pen was a sign of victory for Europe overall. But when you put a Band-Aid over a bullet wound, it doesn't mean the bleeding stops. The situations that led to people being able to ride, we'll call it nationalism, if that's a good thing or a bad thing. But if that was the wave that inspired certain candidates to come to power or come to popularity that questions the foundation of the EU, what has been done to make the EU a more equitable institution where people in Greece aren't getting pushed over by German bankers, where people in Italy aren't able to control their own outcomes because of accountants in Brussels? Why is Germany able to enjoy the lowest unemployment rate of any country in the region and basically have its manufacturing sector subsidized by a weak euro? How is that fair when Italy and Greece and Spain and Portugal all could use a much, much weaker euro, but they can't have it because Germany's in the equation?
Mm-hmm.
So it is inequitable. And yes, the EU may be preserving its short-term viability by sticking up to the UK and not letting someone tear it apart. But if you don't address these long-term problems, which they really haven't done, then these problems will only grow and fester and become worse over time. And so as it stands right now, Merkel's leaving office within the next 2 years. Mm-hmm. She's past the apex of her power and her influence. The refugee crisis completely decimated her legacy and her ability to perhaps keep Europe together long term. We already talked about Macron, and you've mentioned the Gilets Jaunes protest, the Yellow Vest protest. And in fact, they're protesting tonight about rebuilding Notre Dame, which speaks to the discord in French society right now. Yeah. Spain doesn't have a government. Belgium doesn't have a government. Italy is a constant thorn on the EU side. And perhaps the man who's taken on the biggest burden of keeping the euro stable the last few years, Mario Draghi, his term ends this October.
Yeah.
There is a real dearth of leadership in Europe about to emerge in the next few years, and they haven't solved any of the problems that led us to where we are today. So Europe is a pressure cooker for me. It seems like it's going to go off sometime around the corner, and the next recession could really make Europe the focal point that we barely missed in 2010, 2011, 2012 with Greece.
Yeah, and there's another factor here is how that affects the U.S. You've already seen major inflows to U.S. banks and financial institutions from Europe, from fund managers, et cetera, pension funds, whatever, big corporations who have no confidence in a Deutsche Bank and other such large banks there. They're worried about it. They're shifting their money over to the U.S. This is part of why the market's gone up. I think part of why the U.S. economy has been doing so well, because we've got these huge capital inflows, and I think that they're really underappreciated by the analyst community at large. They still look at the United States as just one market and kind of immune from, they always pay lip service. Yes, it's a global economy, but then when they look at the U.S. economy, they always kind of look at it as insular and not subject to outside influence. But this has been a huge trend, and I think it's been a growing trend that just isn't really recognized, and maybe for partly political reasons as well. All of these banks have overseas operations and are international in scale, and they don't really want to stir up the pot.
You look at the United States, there's a reason why the economy has done so well, historically speaking. We have the type of rules, regulations, and laws in place that allow for capital formation and allow for innovation long term. So if you are someone who needs financing for a new company, for a project, if you are looking for investors to take on risk, you can come to the United States and park your capital here and know that this is a place where you will see that capital deployed in manners to generate wealth and returns, not just preserve your income, but to push the world forward. And I think that's always going to make the United States an attractive place for capital. To that end, even though the United States may be having its own partisan political issues, it's still the nicest house in a bad neighborhood.
Yeah.
Brexit's a mess. Europe is a mess.
Mm-hmm.
Would you really want to park your money in China right now, where if you make an investment into a firm, the government can basically look over the firewall, see what that technology is, and once that IP sharing agreement ends up, they can form their own company and basically create a competitor without having to done any of the legwork themselves.
Mm-hmm.
Investing right now,
point well taken,
outside of the United States is a difficult endeavor.
Yeah, and yep, that's where we're really at here. Anyway, hey, we've kind of exceeded our time, but it's the first time you were on. Really fascinating discussion, and I guess the thing to ask you now is best place to find you these days and your work?
Best place to find me is on our public website, www.dailyfx.com. That's DAILYFX.com. You can also follow me on StockTwitch and Twitter at CVecchioFX.
All right, excellent. Hey, and we'll have a link in the show notes to your site there, to dailyfx.com. And anyone listening, please, whether you're on YouTube or you're on a podcasting platform, please subscribe, like, and share. It really helps us a lot when you do that. Twitter feeds at Kerry Lutz, Facebook, Financial Survival Network. Chris, been a pleasure. Thanks so much for visiting.
Thanks, Kerry. Hope to talk to you again soon.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.